All right, let's jump right into this explainer and unpack exactly why first-time homebuyers are facing such a, well, sluggish spring market right now. If you've been keeping an eye on real estate lately, you've probably felt it. A bit of a standoff, right? Buyers are holding back and sellers, especially homebuilders, are having to seriously pivot their strategies. We're going to dig into some wild new data showing how builders are practically begging to get you off the sidelines and why the old rules of what a house should cost are kind of flipped upside down at the moment.
Section 1. A gloomy housing market.
Now, the number 37 is really the key here. To give you some context, this is the latest score from the Housing Market Index. It's a monthly snapshot put together by the National Association of Home Builders and Wells Fargo. And on their scale of 1 to 100, a flat 50 is the baseline for high confidence. So sitting all the way down at a 37, yeah, that reveals some deep, widespread caution in the industry. The folks actually pouring the concrete and framing the walls are feeling pretty anxious about where things stand right now.
And it's really important to know what actually makes up that gloomy number. You know, this index isn't just based on a feeling. It tracks hard, tangible metrics. We're talking current sales, actual foot traffic from prospective buyers walking through the door, and projected sales for the next 6 months. So even though there was a teeny tiny month-over-month uptick recently, this snapshot tells us conditions are still firmly stuck in negative territory. The foot traffic just isn't showing up the way builders needed to for a healthy spring season.
Moving on to Section 2. High rates dampen demand.
Well, the 6.46% is the major culprit here. That is the current average for a 30-year fixed mortgage. Mortgage rates are absolutely the crucial thing we have to watch. Because, get this, even though this number is actually a tiny bit lower than it was this time last year, it is still high enough to throw a massive wet blanket on buyer demand. I mean, for a first-time home buyer, a rate hovering around 6.5% completely wrecks the monthly math compared to the rates we saw just a couple years ago.
And honestly, bank rate principal analyst Ted Rossman hits the nail right on the head here. He points out that this negative index territory really just boils down to a broader gloom fueled by a brutal double whammy: high prices and high interest rates. It's exactly this combo that's dragged us into such an incredibly slow spring home buying season. Buyers are crunching their budgets, staring at those rates, and just deciding, nah, we're gonna wait.
Which brings us to Section 3. Builders offer buyer incentives.
So how do you attract those totally hesitant buyers? Well, roughly 1/3 of home builders nationwide have actually gone ahead and reduced their base prices over the past month. Think about that for a second. Sure, 2/3 are holding the line, but a full third of builders are actively slashing their sticker prices just to get you to look at them. But here's the thing, dropping the sticker price isn't the only tool they have.
This is where it gets really crucial for first-time homebuyers. You've got to understand the other incentives builders are using to sweeten the pot. Beyond just straight-up price cuts, they're throwing in closing cost credits and temporary mortgage rate buydowns. Now, if you're new to the whole real estate game, let me explain. Closing cost credits mean the builder is basically stepping up to pay for some of those painful hidden fees required to finalize your mortgage, stuff like appraisal fees, title insurance, and loan origination fees. It essentially keeps a lot more cash in your pocket on signing day. And then there's the temporary mortgage rate buydown, which is a massive perk right now. Basically, it means the builder actually subsidizes your interest rate for the first year or two of your loan, so you get a much lower monthly payment right out of the gate while you're getting settled. These are literal financial levers builders pull specifically to fight back against that 6.46% rate we just looked at.
All right, let's look at Section 4, the surprising price flip.
Okay, here is the ultimate plot twist in the current real estate market. Traditionally, you'd absolutely expect a brand new, sparkling, never-lived-in house to cost a premium, right? But check out the numbers. The median price for a new home is currently sitting at $390,000, making them noticeably cheaper than existing older homes, which were hovering at a median of $420,000. I mean, it's a complete price flip. But before you sprint out the door to buy a new build, thinking you just found the cheat code to housing, Ted Rossman gives a little buyer beware warning. This price difference isn't some magic trick. It's largely because new builds are currently being designed a bit smaller in square footage. Basically, builders are adapting to these affordability issues by just building smaller footprints. So yes, you're getting a brand new house for less money, but you're also probably getting a little less space compared to buying an older existing home. It is definitely a trade-off you've got to weigh carefully. So, let's wrap up this explainer by asking a super practical question. We've laid out the data. The market is clearly hesitant, rates are hanging out in the mid-sixes, but on the flip side, builders are actively slashing prices, covering closing costs, and buying down your interest rates. Plus, the median price for a new build is actually lower than an existing home. So, if you've been sitting on the sidelines waiting for that quote-unquote perfect time to buy,
Could this weird, sluggish, gloomy spring actually be your unique window of opportunity? Could this be your chance to negotiate a killer deal that you'd absolutely never get in a hot market? It's for sure something to chew on as you navigate your own home buying journey.